Now let's take a look at the bigger picture. Daniel Eyes with us, CFA, CIO, Fort Pitt Capital Group. Thank you for being here. Daniel, your thoughts on the market? You know, it's tough because there's a lot of exciting things happening, and then you peek at the Dow and you see it's down 551 points, right? Not a small, I mean, it's not a big move, but it's not a small move when you see a 500-point day.
Yeah, absolutely. Well, first, thanks for having me, Nicole. Nice to be with you. I'd say outside of today, we think that there's still a lot of, bullish assumptions already reflected in prices at the index level. I think it tells us we really need to have corporate earnings results live up to these high expectations. And the good news, the positive, is that's happening. We were impressed with the results from the first quarter earnings season, especially with how well companies have been managing their profit margins. We think that gives some credibility to expectations for low teens earnings growth for this year. Also, I'd say given high value, we probably do need an interest rate cut or two in the back half of the year really to support these elevated valuations. And I think we're starting to see some early signs of weakness in the labor market, consumers being more selective with their spending, and that should give the Fed some cover to move forward with some cuts later in the year. So plenty of positives, plenty for the bulls to hang their hats on, but we think a lot of that good news is already reflected in index levels, and we're more excited about some of the opportunities in stocks that have really lagged the broad market here recently.
Yeah, it's interesting. Some of the names you have here include UnitedHealth and Lululemon. Tell us about those two names. Those are some of your picks. Do you think they have 10, 15% upside?
We do. And I'll start with UnitedHealth. We really like the long-term demographics and trends. We think they're very favorable for UnitedHealth's business. We clearly have an aging population. We have 65,000 people turning 65 in this country every single day. If we look at healthcare spending, 50 years ago, that represented about 5% of GDP. It's 17% today and moving higher. And we think that gives UnitedHealth pricing power. This is a company that's grown their earnings per share by about 15% a year over the last decade. We think that that's doable going forward and not reflected in their valuation. So we really look at UNH as a growth business trading at a value. So, this is Lulu's a stock that's
I'm hearing you.
Okay. Lulu's a stock that's really gotten beaten up hard since they reported earnings in late March. The stock's down more than 35%. And we just think that that's way overdone. It was really caused by two main issues. First, management gave, full year earnings guidance that was slightly below consensus expectations by, 1.5%. And we think that management's assumptions were very conservative, and the street is giving the company absolutely zero credibility for the fact that they've beaten initial early year guidance by about 15% over the last 3 years. And then the other concern is really competitive pressures. And we're a little bit less concerned there, given the fact that the two new entrants to the market only represent, a little less than 1% of the global market share. And we haven't seen that slow down Lulu's traffic in their stores or online. So this business is certainly slowing down compared to, 25% annual revenue growth over the last 5 years. But that was well understood and well expected. We're really excited about their new verticals, their growth in markets, which we think will continue for a long time. Yeah. And the stock's trading at a trough multiple, a lot of bad news already in the price.
Daniel, nice to see you. Thank you so much. So UnitedHealth, Lululemon, we didn't have time for Blackstone, but I'll make a note of that one too. Daniel I, Fort Pitt Capital Group. Thank you.